Okay, good morning, everybody. It's Mike. It's just coming up on 11 a.m. Chicago time, 9 a.m. Pacific time, and get started in a few seconds here. And I want to thank you for taking the time out of your busy day to join us to join in today's training on how to get your edge in trading in order flow. Right? Every book you read on trading always says, you got to find your edge in the markets, right? But they don't really tell you really how to find your edge. It's sort of, a blanket statement that, as traders, we're always looking for that edge. And, in anything, whether it's sports or, cards or, we're always trying to find an edge in what we're doing. And, that's how you become successful in something is you develop a skill and you apply it. So what you're going to learn today is hopefully you're going to come away from today's presentation and you're going to understand how to read the market. And reading the market isn't so complex that, oh my gosh, I need to have a math degree, anything like that. You can, read the market based on what's trading right now. And I'm going to show you how to trade smarter with order flow, right? The old saying, don't work harder, work smarter, is especially true in trading. And I'm going to show you how to understand what's happening in the market based on what's trading right now. Because at the end of the day, as a trader, you got to realize what you're trading. You're trading on the information that is current, right? You don't want to necessarily be trading on information that is, 15 minutes ago, an hour ago, previous day's information. You want to be trading on what is happening right now in the market. Now, for those of you that are new to one of my presentations, just give you a quick little brief background on who I am and, where I'm coming from, because there's a lot of people out there on the internet, telling you, oh, this is how you trade, but they don't really have a trading background, right? They opened an account a couple years ago. They put a couple $1,000s in it. They made 20%. All of a sudden, now they're a guru. But, I have a solid background going back to the 1990s when I started on the CME floor as a runner with Dean Witter Reynolds. I literally started at the bottom of the industry and worked my way up. After leaving the CME trading floor, when electronic trading started taking off, I joined the upstairs trading desk at Dean Witter. And, when Globex on the CME, Project A on the CBOT, and NYMEX Access started to really become popular, I realized that is where the future in the industry is, right? It's going to be electronic trading, and I got to position myself because, that's where I want to be. So I've been trading electronically literally since the infancy of electronic trading back in the early 1990s. And, I spent 3 years there. Then after that, I joined the global macro trading desk at EDF Man. It's the big EDF Man is a huge English trading company. They've been around since the 1700s, trading. They think they started out in sugar, but they're really trading, anything and everything you could imagine. After that, I joined Commerce Bank in Chicago as a licensed Eurex trader, and I traded Bunds, Bobbles, Schatz, as well as all the U.S. contracts. I had a license from the Eurex exchange, which previously was the DTB, where I was only one of a handful of people outside of Germany that can actually trade their contracts outside of the country, right? There's only probably about 6 of us that were in Chicago, and we had this license to trade these contracts, and it was great, because it was like shooting fish in a barrel. And after Commerce Bank, after September 11th happened, I took about 6 months off, and I joined Cargill in Chicago. Cargill, the big American trading company this time. And again, people don't understand how big Cargill is. It's the first or second now, depending on the metrics, privately held company in the United States. If it was a publicly held company, it would rank like 7th or 8th. But they literally trade everything you could also imagine. They account for about 30% of the U.S. grain exports, about 25% of the meat exports. And this was around 2004, early 2004, the exchange in Singapore was closing, and they wanted someone to go out there and set up a trading desk for the off-the-floor trading activity. So I moved out to Singapore, set up a trading desk there. It's all futures because, being in Chicago, you have the futures exchanges. And eventually I left Cargill and joined JP Morgan, where I was vice president of futures trading for 8 years, right? And it was a trading job where I'm sitting on the desk, banging away on the computer, trading all day long, from since it's in Singapore, the Globex reopen would be 6 a.m. I would trade that until basically the close of Hong Kong, which was 4:15. Be in the office until 5. But after 8 years of that, I really felt, I really felt like I was on a treadmill, and I wanted something more to life. I had gotten married already. I had a daughter already, and I left. I left a perfectly well-paying job at a very prestigious company, and because I felt that I already developed the skills that I can do this on my own, right? I don't need to work for a company to do this. I wanted the freedom, and trading gives you that freedom. And around 2015, I started up Orderflows.com, which is my company where we provide training for traders on how to read the order flow, as well as software for traders to use to understand the order flow. And the reason I talk about the software is because the charts you're going to see in this presentation are generated from the Orderflows Trader, which is now 3.0. We've had the original Orderflows Trader, which was released in 2015. We did an upgrade around 2018. And then just last year, we did another major upgrade, which is the version 3.0. Now, it runs on NinjaTrader 8, and it's a volume footprint chart, but not just a regular volume footprint chart, because you can get volume footprint charts pretty much anywhere nowadays. But this one has ways of analyzing the order flow that I analyze, right? So it's not that, like I said, you can get charting software that just puts a footprint on a chart, but as you're going to see, it's better to have tools that are going to help you analyze what you're seeing in the market, because unless you're an experienced order flow trader, it's going to be a little bit difficult to see the same things over and over and over. And we've had this is our third upgrade, and we've added, every time we do an upgrade, upgrades are free, but we add in more tools for the user. So it's not just a basic footprint chart. Now, honestly, I'd never set out to start a software company, but I started writing a book after I left JP Morgan. I had a lot of time on my hands, even though I had, a new daughter, and you think, it's going to be busy. I had a lot of time on my hands, so I started writing a book on trading, specifically on trading order flow. And, eventually, as I was trading order flow myself with other software, I realized that, the software is just so basic. Why don't I add some tools in there that can improve my trading analysis, so that I don't have to concentrate on so many little, every little tick that goes through. Let the software lift some of that burden off me. So if you stick around till the end, I'm going to show you how to get a copy of my book called Trading Order Flow for free. Okay, it's a digital download. You're not going to get the hard copy, but it's an interesting read, and you could learn something. But before we begin, just a brief disclaimer. We're all adults here, right? We do understand that trading is risky. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Okay, sometimes people don't understand that. They think trading is easy. I see, especially during the pandemic, everyone was sitting around in home. Then we had that big V-shaped recovery, and 12-year-old kids are making 30%. And the moms are posting online, "Oh, my son is such a great stock investor," when they just caught the market at the right time. Now, when I was first introduced to a footprint chart, right? This is a footprint chart, an order flow chart. I thought, this is stupid. What is all this? There's a lot of numbers. Honestly, I was never a big numbers person, even in school. And, when I joined JP Morgan, I thought, God, they gave me a nice offer and all that. And, part of me was thinking, I don't want to be sitting around talking about yield curve analysis and all that sort of stuff. But it's really not like that. That's what sometimes people get so caught up in thinking that the financial world is like. It's not. And the same thing with a footprint chart, right? You see a lot of numbers, and it's easy to think, get lost in it and say, I don't want to deal with these numbers. Well, I'm going to show you, you don't have to, right? Really, all the numbers that you see here are just records of the trades that have happened. And again, one of the reasons why a lot of traders are scared of going to a footprint chart is because excuse me, they think it's too hard to read. Okay. I'm sorry for coughing here. It's like looking at hieroglyphics for a lot of people, because it's like, oh my gosh, I don't understand what these different numbers are. There's numbers on the left side, on the right side. Some are blue, some are red. There's different volumes going through. It's just too much for them to digest. But once you understand what it is, what each number represents, it really makes sense. Because to be honest, when I first went to the trading floor back in the 90s, that's what fascinates, that's what draws a lot of people to the trading floors, is they see all this energy and, a lot of people yelling and screaming, but it's very precise. People are talking to people. It's not just you're just not just like a room full of kindergarten kids where they're just all running around yelling and screaming. No, the communication between traders is, on point. It's, a trader in the pit, has his clerk who's talking to someone on the phone. It's all little conversations, and it all, once you understand it, once you spend, a half a day on the floor, then you really understand what's going on, and it's not chaotic at all. So as I spent more time with the footprint chart, because it came out, I don't know, around 2005 or so, 2006, and sort of different variations, even though there had been talk since the 80s of sort of analyzing volume in that way, the market really made more sense to me rather than just looking at time in sales or, the depth of the market, basically the trading dome. And there was just really so much information that it was just like, open up a Pandora's box, so to speak. I'm sorry. I got this cough. Just yesterday, okay, market had its nice 40-point move up. And if you're looking at a normal candlestick chart, right, you just see this market going sideways, and then boom, it just takes off to the races, rallies 40 points. But if you see down here, right, because you don't know, we're just sort of in a tight trading range. People, they'll draw their trend channels or they'll draw their support and resistance levels. But if you can see something happening down here when we're trading around 4,300, 4,295 in the order flow, you're going to be able to position yourself for this move as early as possible, rather than saying, well, we finally broke out of this range, up here at 43.15, or, even up here around 43.20, you're getting in at the ground floor, so to speak. And why is that important? Is because the earlier you get into a move, the tighter stop you're going to have. So imagine, right, if you're drawing a, sort of a range here, right? You'll call this double top, right? And a lot of people say, well, we got to break this double top first before we break out. Okay. Well, that's at 43.10, right? Where are you going to have your stop? Well, it's going to be down here, below this swing low here at 42.95. So you got also now you got a 15-point stop. But if you could be getting in for a reason between 4,300, 4,305, you just cut your risk in half. Okay, your stop is still going to be somewhere down here around 42.95, but you're only getting in at 4,300, 43.05 rather than 43.10, 43.15. So, that's how order flow is going to help you, right? It's going to help you tighten your risk levels, right? Instead of having such wide risk levels, it's going to give you a much better stop placement. And, with the order flow chart, you can understand what's happening in the market, right? This is that low there that I just showed you on this chart right in here, right? And if you're looking at that on the order flow, well, you can see the market is starting to, buyers are coming in. Now, how can you tell? Well, you could be looking at, I'm going to talk about it in a minute, delta imbalances, points of control that are giving you the clues that the aggressive buyers are coming into the market, that, hey, you know what? It's probably worth buying it somewhere in here around 43.01, 43.02. I don't think you get in at 4,300, but your stop is just down here, 42.90. This low is like 96 and a quarter. So you just have a stop at 95, right? Rather than waiting for this market to sort of break out, be trading up here at 43.10, 43.15 before you decide to get long, right? So you're getting in, 10 points earlier than everybody else, but your risk is still the same level. Now, gone are the glory days of pit trading where, where traders paid hundreds of thousands of dollars for exchange memberships. And why did they pay that much money? Is so they can see the order flow as it occurs. They could see the big orders coming into the market from the big banks, the big traders. The guys on the floor, they're smart, even though they don't have, a lot of them just, have high school degrees. Everyone thinks, well, you only got a high school degree. No, these guys were sharp. Even, they would know where the big traders cleared their trades through. They knew who Soros used as their broker. They knew who Tudor used as their broker. And if that broker was all of a sudden checking the market, getting active, then they're going to participate, right? And as an off-the-floor trader, you don't have access to that information. But now that it's all electronic, it's become anonymous. But for traders, for you and me and everybody else, sort of the playing field has been leveled in terms of order flow, because now we can see when the big orders are coming in, right? Because before, when it was just the trading floor, you would just see the numbers printing on your screen. You wouldn't see the volume. You wouldn't know if, the market traded a certain price, if it was heavy volume or light volume. It was just, it traded that price. That's how traders, in a sense, became price-centric. They treated all prices the same when not all prices are the same. So that leads me to the first point, learn how to read the market. And, honestly, what does that mean, read the market? Well, it just is in cards, right? You're trying to read the other players' tells. What are they doing? Do you think they have a strong hand or a weak hand, right? And you could tell that with the market. Now, yesterday in the ES, right, the E-minis, if you're looking at a normal candlestick chart, you don't understand why the market went up here and then sold off and then rallied back up and eventually sold off again, right? Because if you're just following price, you're really leaving out a lot of information, right? You're leaving out what the aggressive traders are doing. Is there passive traders, which is resting liquidity in the order book? How aggressive are traders being? Is there price acceptance? Is there price rejection? And for a lot of traders, they just look at a chart after the fact and say, oh yeah, this was a great sell here because of such and such. But as it's trading, right, you want to be able to decide, oh, there's price weakness here, or there's price support down here, rather than looking at it after the fact and saying, oh yeah, I could see we got this double top here, we should have sold off. But how many times have you seen the market hit a double top and then pause and then just keep going up? You want to be able to understand what's happening in the market. And that is where using the order flow allows you to see what the market is doing based on the actual activity of what's trading in the market, right? Because now you can see how aggressive buyers are being, how aggressive sellers are being. Is someone coming into the market with supply? Is someone coming in to support the market? You can't tell that just by looking at a normal bar chart or candlestick chart. Now, order flow has three main data points. There's delta, point of control, and imbalance. Now, when I say three data points, these are not the only data points, but these are the main ones, right? And, from them you have other data as max delta, min delta. Now there's value areas, but there's a lot of different ways you can use this information. So just really briefly, delta is the difference between aggressive buying and aggressive selling in a bar. Now, every bar is going to have a delta, right? It's going to be either positive or negative, or on rare occurrences, it'll be zero, right? Where everything just is evenly matched, okay? So when you see a bar that's got positive delta, like here, positive 905, it's telling you that aggressive buyers were in control of that bar. Okay, that's all. It doesn't say buyers are in control of the market right now. It's just telling you in that bar, buyers are in control. If you have negative delta, it's telling you aggressive sellers were more dominant in that bar. Okay, so from that information, you can start to put together pieces as to what is happening in the market. Now, point of control, every bar has a point of control, okay? And it's going to be highlighted. Usually you're going to have a rectangle around that price level. And it's where the most volume occurs in the bar when you add up the volume traded on the bid, the volume traded on the offer. Now, the market's traded in a two-way auction. There's always a bid, there's always an offer. Okay, but point of control just measures it at a price level. Okay, so oftentimes when you see a market trending down, you're going to see lower points of controls. Each bar is going to be putting in a lower point of control. Okay, as the market is going sideways, point of control is going to be more or less around the same level. If a market is rallying, generally you're going to see point of controls migrating higher. Now, imbalances. Now, not every bar is going to have imbalances, because what an imbalance is, it's the difference between the aggressive buying and aggressive selling in the two-way auction, right? So on the bid versus the offer, by a ratio of usually 4 to 1. You know, some people use different ratios. Some people use 10 to 1. Some people use 3 to 1. But, you know, sort of the industry standard, so to speak, and, you know, the starting point for most traders is 4 to 1. So when you see blue numbers in a bar, in the footprint, that is a buying imbalance. When you see a red number in the bar, that is a selling imbalance, like 32 versus 165 right here in this red bar. That's a selling imbalance, because when the market was, you know, 43, 14 and a quarter at a half, they traded 165 on the bid, only 32 on the offer. You know, up here when it was 16 and a quarter, 16 and a half, it traded 35 on the bid, 140 on the offer. So you have more aggressive buying than aggressive selling in the two-way auction here. Just as down here with the selling imbalance, you have more aggressive selling than aggressive buying in the two-way auction. And generally speaking, as the market is selling off, you're going to see selling imbalances, more selling imbalances than buying imbalances. There will be some buying imbalances scattered in, because you know what, as the market's selling off, people are going to take profits, right? They're just going to lift the offer, get out of their position. Just as a market that's going up, starting to rally, you're going to see buying imbalances. So remember, right, the market is always right. And if the market is always right, then why don't you just follow what the market is showing you, right? Why you got to try and fight what the market is doing? You know, that's where a lot of traders run into problems, is they try to fight the market, right? And at the end of the day, they're going to lose, okay? It's, you know, we can sit here and do all the analysis that we want and say, oh, you know what, everything I got, you know, all my indicators, you know, every form of analysis I did said the market's got to go up. So you get long, and what happens? The market sells off. Well, if you hold on to that position, you're probably going to get railroaded. If the market is going up and you're, you know, sorry, if you, you know, you think the market is going up, but the market is selling off, because all your tools that you have is telling you that the market should go up. But if it doesn't, remember, you're not the market. The market is out there. If the market is doing something than what you think it's doing, and you're there fighting it, you're going to be holding the bag, so to speak. You're just going to lose money. Why don't you just do what the market is showing you it's trying to do? If the market, you know, regardless of whether you got 100 indicators and 100 of them all say the market is going up, but the market is selling off, you should be going in the direction of the market, right? If it's selling off, you go short. So that's where order flow is going to help you, right? It's going to keep you on the right side of the market. And once you understand order flow, once you look more closely, you'll see how much activity you never noticed before. You're going to notice accumulation. You're going to notice distribution. You're going to notice absorption. You're going to see where trap traders are. You're going to see where supportive buying comes into the market, where resistant selling comes into the market, and so much more. You know, it's one thing to look at a bar chart after the market closes and say, oh yeah, you know, there was trap traders at this level. You know, here's accumulation here, as opposed to in real time. That's what order flow allows you to understand is happening is see this stuff happening in real time and basically take advantage of it, right? Because that's what you want to do, right? You want to trade smarter with the order flow. And once you understand how to read the information generated by the market, then you can trade smarter because you're going to be in sync with how the market is trading and you're going to feel more confident. So, back to our E-mini chart from yesterday. Okay, excuse me, we had this nice sell-off here, right? From 43.18 basically down to 42.80. Almost a quick 40-point sell-off here, right? In the first half hour of trading. What would you do, right? Coming into that, this was the chart here leading into it, right? I mean, it just shot up right after the cash open, sort of going sideways. Okay, well, are we going to still go higher, or are we going to start selling off? And if you're looking at the order flow and you start looking at the delta, the POC, the imbalances, well, you're going to start to see things that other traders aren't noticing until the market really starts selling off, right? It's going to help you get in earlier, up near the start of the move, rather than after the move's already, halfway over. But if you're looking here, right, you can see the delta. Well, what's happening in the delta? Let's take a look. Okay, so remember, the market had just shot up. Now it's going sideways. Okay, you got this bar here, this green candle, nice big positive delta, 905. Then the next bar, positive delta, 179. Next bar, positive delta of 70. Next bar, negative delta, 143. So we're up here at the high after the cash opened. Right? It's not the high of the day. It's the high of since the cash opened. And buying was fairly strong, right? You remember, to rally, right, you're going to need some strong aggressive buying, right? Back here, you got 1,500 is the delta. But then it just goes sideways. And delta is kind of, nothing special. Right? Plus 200, minus 300, minus 200, plus 300, plus 100, minus 200, minus 188, plus 200, and then plus 900. Okay, yeah, maybe we're going higher. You see some signs of aggression here. Nice aggressive buying. You got some imbalances. But then no follow through. 179, 70 on some red candles. That's not good. Right? Okay, so you're seeing the market getting weaker here. Because for this market to go higher, you're going to need strong positive delta, not delta getting weaker. So instead of getting stronger, it's getting weaker as the market starts falling over, right? What's POCs doing? Well, POCs on the bar with the nice big positive delta is way up here, 43.16. Next bar, it's at 43.15. Bar after that, 43.14. Next bar, 43.13. POCs are starting to migrate lower, so it's telling you, the major volume, the level with the most volume in each bar is going down. That's not a sign of a market that's going up, right? If a market was strong and is rallying, right, you're going to be seeing volume migrate higher, not volume migrate lower. Because after all, what causes the volume? Well, it's traders that are happy to transact at that price. And if people are all of a sudden now happy to transact at lower prices, that's a sign that, maybe this market's going to start to sell off, which it did, right? So instead of, waiting for this market to start breaking down in here, a lot of people will say, well, we got this candle down here, we got to break this wick, I get short down here at 42.98. No, you can be short from up here, 43.16. Where's your stop? Just above this high, right? So instead of getting short way down here, 43.05, 43.06, 4,300, you're short at the beginning of the move, right? And again, it's not like it's that big a leap in faith because you're understanding what's happening in the market. You understand that the aggressive buying is just not there anymore, and now we're starting to see aggressive selling. Imbalances, honestly, not so much in here. I mean, you got one here, but it's not strong yet until you start really selling off. But the signs were very clear in the delta and the points of control. Then you sell off, right, from that 43.16 area. You come down here to the 42, 82, 42.84 level. Then you rally back up again to where you just were. But in the order flow, what are you looking for, right? Again, I was talking about the points of control. All right, I was looking for imbalances, looking at the delta. Okay, so as you're coming down, you got this big bar here, right, with big negative delta minus 2300. Okay, that's bearish. Yeah, okay. Market continues minus 900. Then you see positive delta 300. Then okay, a little bit more selling minus 600. And you see positive 900, positive 168, positive 223, positive 1300, positive 900. Now you're starting to see points of controls sort of start to go up here. You got 1, 2, 3 higher. Came off a little bit here in these two bars. Now 37 negative delta. Even though it's got negative delta, right? It's just 37, which is pretty much neutral, right? So even though it's a red candle and it's down, I see this delta of minus 37. I don't read too much into it, right? The next bar, minus 475, is a decent number. Okay, well, let's wait and see. Is there going to be more selling or more buying coming in? Well, no, you see more buying coming in. Okay, you see positive delta of 590. So what else do you see, right? You see 1, 2, 3, 4, 5, 6 buying imbalances in this bar right off this swing low, right? Points of controls moving higher. This bar I just sort of treat as neutral. This bar, okay, it's a red candle. Doesn't mean that this whole this rally is not going to happen. And then the next bar, nice green candle, point of control a little bit lower. Close up well above the point of control. Obviously, if we hold, point of control is going to be higher again. So you could be looking to get long somewhere in here in this bar, 42.90. Anywhere in this bar, 42.90 to 42.93. Even at the end of the bar, 42.95. Right in here, you could be getting long. So to position yourself for this move back up, right? Rather than waiting for it to break out of, whatever level here, sort of come back up, you could catch this move. And again, where's your stop is just down here, right? You know where your risk is, right? If you're getting long in here, 42.90, 42.80 is your stop level, rather than waiting for it to sort of break out of this, this little pullback high up here at 42.96. You get in much earlier. But you should be able to see that the aggressive buying is coming in the deltas, right? In the imbalances, right? That's what you're looking for, sort of get a better picture. Because if this market was going to keep going down, you're not going to see this strong aggressive buying coming in, right? You're going to see more bars with strong negative delta, not strong positive delta, right? Markets don't rally on strong negative delta. They rally on strong positive delta. Right, and you don't see, other than these 3 bars here with strong negative delta, you don't necessarily see that. You see one bar minus 600, but then it's plus 900, plus 1300, plus 900. It's got more of a shot to rally than to continue down. So hopefully by now this is starting to make sense, right? That you can see how easy reading the order flow is, right? Really all it is just common sense thinking. So let's take a look at the rally back up, right? We came all the way back up to 43.18, right? Then we sold off again, okay? So hopefully by now you can start to see what's happening, right? Remember, this market had just rallied from, the 42.80 area back up to, 43.15, 43.16, 43.18, and it's just sort of holding steady there. Okay, you don't know, is this market going to break to the downside, or is it going to keep going to the upside? But if you're looking, again, at what's happening in the order flow, it's just going sideways, okay? And do you really see anything one way or the other in the order flow? Not really, right? You don't see really strong aggressive buying to take this market back up. You just see, kind of smallish deltas one way or the other, negative 400, positive 400, positive 400, positive 193, minus 252, minus 162, plus 100, plus 56, plus 70, then minus 749. Okay, if this market is going to rally, you want to see some nice, solid, positive deltas, plus 600, plus 800, plus 1,000. Now, every market is different. This is the ES. If you're looking at something like crude oil, the numbers would be different, but you got to understand your market. Now, In crude oil, if you see plus 400, that would be big. But on E-minis on a 1-minute chart, that's just, nothing special. But then you start seeing in here, well, you see the deltas minus just plus 100, plus 56, plus 70. That's a sign already. Even though, this market is just sort of going sideways, the buying is just not there anymore. And if the buying is not there anymore, what do you think the market's going to do? It's going to fall over, right? Because there's nobody there to support this market. You don't necessarily need to have strong negative delta. As long as you don't have strong positive delta, good positive delta, the market's going to sell off, which it did. So again, just follow what the market is doing, right? You and I, we may be smarter than the trader at Goldman Sachs or JP Morgan. I know a lot of these guys, trust me, they're not rocket scientists, Some of them are just good at trading, but at the end of the day, they have something you and I don't have. They have very deep pockets, and trying to fight with them is going to be an uphill battle, right? We're just not going to win those battles. Now, the third part that I want to talk about is understanding what's happening in the market based on what's trading right now. Because remember, right, we have to base our trading decisions off of what is happening right now. We don't want to necessarily be making trading decisions based on things that happened yesterday or the day before. I mean, on different types of trading strategies, okay, that might be good, but if you're trading order flow, the best time to take advantage of it is right now, based on what's happening. If you're basing your trading decisions on what's happening right now, you got to do it. Be like me saying, hey, let's go fishing. Where would you rather fish, right? The place where the fish are literally just jumping out of the water into the boat, or the area where everybody's in there with a net trying to scoop up the fish? Well, it's going to be better to go to the area where the fish are just jumping out of the water into your boat. It's going to be a lot easier. And trading's the same way, right? If you have a way to sort of catch these fish that are just jumping out of the water into the boat, you're going to be ahead of everybody else that's over, in the area that's being overfished. Now, this morning in the ES, right, the market just went on a tear this morning. Once cash opened, it literally went parabolic, right? It looks like a Bitcoin chart or something like that. We just jumped up from 43.86 all the way up to, above 4,400. And, if you're looking at the chart, it's one of those moves that you wish you could catch as early as possible. But if you're looking at a footprint chart, you could really start to see signs of what's happening early. Now, remember earlier I explained the Orderflows trader software, right? How it helps a trader do analysis for them, right? Because when I started trading with Orderflow way back when, a decade ago or whenever, basically this was the Orderflow chart, right? You had your delta, your max delta, your min delta, your cumulative delta, your volume, and you'd have your point of control, your imbalances. Now these numbers above and below bars are ratios of order flow, especially the measurement of order flow. But this was it. And there were certain things that I would look for in the order flow that would be bullish or bearish. And, I found a programmer. The reason why it's on NinjaTrader 8 is because, back in the mid-teens, 2014, 2015, whenever, the software choices, as far as, I'm not a programmer. And the program that I really found was, some guy that, we're good friends now. He really understands order flow as well. He programmed for NinjaTrader. Okay, so that's why my software is on NinjaTrader, and it's not like on Thinkorswim or TradeStation. So there were certain things that I would look for in the order flow, right? So remember, right, this market just went parabolic right in here from this 43, basically, 87 area, 88, 89, shot up immediately over the next 10 minutes, 15 handles, almost 20 handles. But if you're looking at the order flow, you want to get in as early as possible, right? You want to take advantage of that order flow. Now, I was talking a bit about delta. I was talking about these imbalances. You can see this is a stacked imbalance here. But there's other things in here, right? Now you could add things like the value areas, right? You can see the value areas on the box. This is from my software with a lot of the tools turned on. The Orderflows Trader has extra tools to help you do order flow analysis, so you can really understand what's happening in the market. Now, looking at this on my Orderflow Traders chart, right, it might be a little bit hard to see on your screen, but this is actually a blue box here, which is bullish. This is a blue box here, which is bullish, as opposed to just the normal box, which is gray. If it was bearish, it would be a red color. And in here, we got a very bullish point of control, as opposed to just your normal point of control. So I can see signs in here in the order flow when we're trading down here, 43.86, 43.88, that this market is getting ready to, I don't want to say pump, but go higher. I didn't imagine it to just parabolic move all the way up to 06 immediately from 86 area. But this is sort of the things you see in the order flow over and over, and that's why I put all these tools into the Orderflows Trader, is because I like to look at more than one market. And if I'm looking at more than one market, I want to be able to take some of that analysis burden off me and let the software do it, so I can know at a glance by just looking at my screen, hey, you know what, I got some bullish information in here. Let's pay attention to this market and trade it, because you know what, I'd rather be getting in somewhere in here around the 88 area, 89, 90, rather than waiting for it to break out to the new highs above 99 or 4400. I could get in very fast, and because and the beauty part of it is I know where to place my stop, right? Just below this sort of this area in here where the bullish order flow started. Because if I have bullish order flow coming in at a certain area and the market starts trading below it, well, that bullish order flow obviously didn't work, and you're not going to hold a bullish position if you start getting past your bullish order flow, right? You just won't. Now, crude oil, this is yesterday, right? We hit this low, 77.12. Then we rallied, immediately up to, 60, came off a bit, then rallied back up to 80. But again, as you're coming into a high or a low in this case, you should be asking yourself, is this low going to hold? And you can see here it hit there, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times before it rallied. But if you're looking at the order flow, you can start to see the same signs in here that I just showed you on the crude oil, right? You have your bullish value area, you have your bullish point of control. You see other signs in here. What might be a little bit hard to see on your screen, but there is a sign of market exhaustion appearing right in here with this 5 lots traded, right? It's telling you, market keeps pounding in here, 55, 106, 58, 79, 43, 90, 13, 104, and then just 5. Where's the selling? All the sellers, everyone that kept pounding into it, sell, sell, sell. And they just gave up at this point. And once they start giving up, that's a sign that the market is going to reverse. I mean, you also have bullish signs in here earlier, with this value area, with this point of control. Obviously, you got some divergences in here. And, it's really a low risk trade. You're getting in somewhere in, anywhere, 20, 22 with a stop just below 12. You're risking 10 ticks, for what? The move went all the way up to 60. Right? Everyone says, oh, you got to have a risk reward ratio of 2 to 1 minimum, 3 to 1 minimum. Well, here you are. You're getting long at, 20 with a stop at 10. It's only 10 ticks. Rather than, a lot of people will wait for the breakout of the recent swing high before they get long. They'll draw the line here and they're getting long at 40. Well, the market, after that point, the market only moved another 20 ticks, right? The area to be getting long is down here, right? As the market is breaking out of this area. Now, another feature, right, which I didn't talk about, this is still the same crude oil, is the imbalances, right? And you can see in here, you're seeing this bar's got 1, 2, 3 imbalances. This bar's got 1, 2, 3, 4 imbalances. This bar's got 1, 2, 3 imbalances. And the software, even though these are not nicely stacked, most order flow traders are used to looking at, stacked imbalances that are bunched together, one on top of each other, 3 or more. But when you still have 3 or more imbalances, even if they're spread out in the bar, it's still a bullish sign. And you can see here, it's like there was aggressive buying here, just couldn't pull up. Now all of a sudden you got more aggressive buying coming in here in the form of 3 imbalances. That's why there's this magenta box around it, magenta box around this bar, magenta box even around this bar, more aggressive buying. So you know that there's aggressive buying coming in at the low of the day. What do you think that means? Well, it means people think that this is a good buying opportunity because now they're aggressive. They're showing their hand, right? They're aggressively buying this market, right? So, being able to identify these at a glance, right? And now again, this is not rocket science, right? You're just looking at 1, 2, 3 imbalances, okay? Putting it together and understanding what's happening. We're at the low of the day. We're seeing a lot of aggressive buying coming in. That's bullish for the market. Right? But again, if you're just looking at a bar chart, you're not noticing that aggressive buying. Now this is Bunds today, right? Yesterday, the 7th. Okay, what day are we? Oh, sorry, this is the 6th. We hit that high just around 10 o'clock. It sort of went sideways and then fell over about 20 ticks. Okay, well, what's in the order flow that's going to tell you? Now, people say, well, you got a bullish engulfing pattern, etc. Well, just before it, you had a bullish engulfing pattern to the upside, but the market didn't go up. Right? It sold off. People that trade candlesticks, I used to be a big candlestick guy. And, honestly, when they worked, they were the perfect excuse for why the market went in a direction. But like you said, people say, well, this market sold off because you got this bearish engulfing pattern. Okay, well, why didn't the market rally? Because you got a bullish engulfing pattern immediately before it. So, when they work, they're the greatest thing ever, but a lot of times they don't work. Honestly, they work about half the time. Some work more than others. But if you're looking at the order flow, right, it just really makes sense to you. This is the high of the day here at 92, sort of came off, started to rally back up, sort of poke a little bit higher. You see market exhaustion. 1 contracts trade, right? The market is trying to go back up to test this high, but you can only draw on 1 more trader, trade 1 contract. It's a 5-minute chart, right? Bunds are a very liquid market, right? But only 1 contract traded? Come on, what's going on? Just nobody's interested in buying it. Then you see the aggressive selling coming in. Imbalance, 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 right? A nice big negative delta. What do you see up here, right? As the market's going sideways, you see point of controls just lined up, right? Just going sideways. Okay. And then lower point of control, lower point of control. Okay. You'd be getting short somewhere in here around 80, 78. Even in this bar, market sold off a little bit, started to rally up, and then 2 contracts trade. Market's not going to rally if only 2 people buy it, right? Or 1 person buys 2 contracts, right? If market's going to rally, you're going to buy 600, then buy another 700 here, another 500 here. There's no more buying. People aren't interested in taking this market any higher. Obviously, you got the negative delta. You just hit the high, 844 positive delta. Then immediately afterwards, you got negative 631. Then 187 negative. Positive 805. Okay, maybe this market still got some buying in it. We could go higher. Then it comes in big, strong negative delta, minus 938. It's not a good sign. Positive delta 300, and then the selling just comes right in. Boom, minus 1100, minus 100, plus 900. Okay, maybe this market can start to rally. Maybe not. Minus 300, minus 400, minus 5. Anytime you see some buying coming in, it's pretty sporadic, and it's followed up by a lot more selling. So again, you could be getting short in here around 78, 80 in here in these couple bars. It's just a stop right up here somewhere, right? This area, we had aggressive sellers. If we're going to come back up here and test it, maybe these aggressive sellers will be back in there, right? You sort of have a resistance area formed in here with all these points of controls lined up. If you could get above 85, maybe it'll start to rally. But right now, if you're short at 82, you have an area right here you could hide behind around 85. And what happens is the market sells off from the 80s all the way down into the 60s. Okay, now ES, right? This was, you see markets, right? They rotate. They go down, they go up, they pull back a little bit, go back up. Okay, well, don't you want to understand why the market pulled back here to this level? People say, well, you got a pin bar there. Well, it's not really a pin bar because it's not really a low, right? It's just, it's a low within the last 4 bars, but it's not really. But if you're looking at the order flow, you can understand, this is one of the tools that we have in the order flow trader to analyze what's happening in the delta for you, right? The market had been rallying, okay? Then you get a little bit of a pullback. So you got what happens in a pullback? You have selling coming in. Okay, well, you got selling coming in, but is that selling strong or weak? Because if it's strong, it's going to sell off some more. If it's weak, it's going to stop and it's going to reverse and go back up. And this is, what we have in the software called the market weakness detector. And it's telling you that this little pullback, the selling is weakening here, right? Because, the market's going up. You got nice positive delta, 500, 300, and then negative delta, negative delta, negative delta, and positive delta. So it's telling you the delta, even though you got negative delta, it's getting weaker here. Minus 500, minus 177, minus 73. Green candle. Okay, the selling is over. It was just a little bit of profit taking maybe. The market had just rallied from 44 up to 50. So maybe some of these people that are getting long in here, are taking their profits. And once they're done taking their profits, selling it out, then the market's probably going to keep rallying up. All right, because you got to understand what's the rotation in the E-minis. There's about 4 or 5 points. So it starts to make sense on why this market pulled back here. And you can see it in the order flow. Okay. Gold. All right. This was the 6th, right? A day or two ago, right? Markets hit the high, then sold off and just sort of went sideways in here. Okay. Now, what are some of the signs in the market, right? Well, if you're looking at the order flow, again, market sold off from the high. It's sort of coming down here. What do you see? You still see some selling, right? You see this bar's got 4 imbalances. This bar's got 4 imbalances. Okay, maybe this market can sell off some more. But in order for it to sell off, you're going to want to see more aggressive selling coming in. And you don't see it. In fact, you see the opposite. You see aggressive selling coming in, but it's getting weaker, right? You have a nice strong negative delta of 143. Then you got positive delta, positive delta, positive delta, positive delta. A nice strong negative delta, 89. Another negative delta of 59, which is, decent. Then you got negative delta of 3. Then positive delta 32, 1, what can you do with 1? Then 8, but instead of seeing more selling coming in, you see the selling actually getting weaker. In this case, it's not so much of seeing strong buying coming in. What you're seeing is the selling getting weaker, right? Again, we all like to focus on, what moves the markets, the aggressive buying or the aggressive selling. That's what's going to move a market lower is aggressive selling. What's going to move a market higher is aggressive buying. But if that aggressiveness is weakened, it's not going to keep going in that direction, right? And that's what order flow allows you to see. So hopefully you can see how powerful order flow analysis is. Honestly, on YouTube, I got about 250 videos covering many different aspects of order flow. I wish I could cover everything today, but I just don't have the time. And, there's just so many interesting things in the order flow literally every day. The best piece of advice I could give you is to trade what's happening right in front of you. So if you found this helpful and, if you saw the charts that I used, right, which are generated by the Orderflows Trader 3.0 package, I got a special deal for you that's going to make it easy. Don't overcomplicate trading. As humans, we like to overcomplicate things, right? You don't have to do that, You just trade using common sense. The best computer is the one on your shoulders, right? Your brain. Now order flow analysis provides a trader advanced information that's going to give them an edge over other traders, right? That's what I talk about when, going fishing. Do you want to be fishing in the spot where all the fish are jumping into your boat or going to the spot everybody else is fishing? Hardly, I don't even know what percentage. The percentage is going up of people that use the order flow analysis, but it's still quite low. A lot of traders are just focused on price. They're focused on using, indicators that manipulate price, right? They're not taking into account what's happening in the actual trading volumes that's going through, right? Because if you're treating every price that trades the same, you're going to be at a disadvantage, because, if 1,000 contracts trade at one price and 5 contracts trade at another, they got completely different meanings depending on where it comes in the market structure. So order flow analysis allows you to see and understand what's happening in the markets that other traders don't see. Don't want to make trading complicated. You want to keep it simple. Now, there's 2 ways you can do it, right? You can do it on your own. You can spend a year looking at a screen trying to figure out order flow. But more importantly, you're going to waste a year losing more time and more money, honestly, trading, trying to figure it out. When I ask you, how's it going next year? You're going to, thumbs up. Okay, great. Or 2, you get the education and software from a trader who has successfully traded order flow at the highest levels for decades. That's why I went over sort of, I don't like to show you my resume to be bragging or anything like that, but I want you to understand where I'm coming from, how I learned it, and why I want to teach it to you, right? Because, at the end of the day, it's about giving back. There's no more trading floor where anybody could just come to the exchange and basically get a job as a runner. Those days don't exist anymore. To get a job at a trading firm, you got to have a degree from a top level university in math or programming. The entrance to trading has changed. So, I want you to skip the massive trading losses, but more importantly, skip the wasted time. So the Orderflows Trader 3.0, which is available for NinjaTrader 8. Again, it works on NinjaTrader 8. Doesn't work on Sierra Charts. Doesn't work on TradeStation, TradeOvate, any of those. It runs on NinjaTrader. Or on the free version of NinjaTrader. If you want to use that as just your charting platform, you can execute trades on any platform. I have a lot of users that actually use the free version. They just get a data feed, a real-time data feed. You need that. And they execute through their existing broker. So again, it works on NinjaTrader 8, and it's the volume footprint chart that comes with 17 pre-programmed order flow indicators. I talked about, market weakness. I think I talked about value area briefly, the imbalances in the bars, but it gives you so much more than that. Again, I wish I could go over every one of them today, but I just can't. And you're going to get, I said my chart template, but the way the chart is set up, once you load it onto your PC, it's defaulted for a 1-minute E-mini chart. So depending on the market, you might want to make a couple adjustments. Normally I sell it for $8.99, which is really a great deal. There's other software that sells for a couple $1,000s, but you don't need to waste that money. I like to keep the barrier to entry low. But I realize having order flow software is one thing. The next thing is you got to know how to use it. So I don't just give you the software and send you on your way. I provide a lot of education on how to trade with order flow, because to me that's really the important part, is knowing how to trade order flow. Not just having software that can analyze the order flow. You got to know that there's no red light, green light system really in the market, because every situation is slightly different. So each week, right, for users of my software, I do a private live group training session for everybody. It's Tuesday nights, 7 p.m. And, I just finished episode 139. So it's every week. So you can imagine episode 139. That goes back how many years? Over 2 years. And, some places, some gurus, there's gurus, and gurus, they charge extra for their training. Why? You're making that investment, making that decision to learn something. It should be included in there. You shouldn't have to pay extra to learn how to use the software. So, that's why I do the live session. So you could come in, any questions you have, problems with setting it up or anything. I'm there every week, unless it's like a holiday or something, or I got some last minute emergency that I have to cancel it. But again, you can see I'm on episode 139. So obviously this has been going on for how many years? It's there for you to ask questions. If you don't ask questions, I'm just going to talk about interesting things I saw in the order flow. And, hopefully you can learn something, because really it's not about making you a clone of me. It's giving you ideas that you can take and improve your trading. It doesn't, just because you use order flow doesn't mean you have to disregard everything you've ever learned about trading. No, you could add order flow and improve the current way you're trading. So I'm also going to give you access to my order flows trading course, which I sell for $297 on my website. People buy this almost every day, and you can get it for free. Okay, but not only that, you're also going to get access to this video series I did, I used to have an inner circle for traders. I paid a lot of money for this, and these are just the videos, which there's 56 videos on, sort of advanced order flow tips, analysis. I say tricks, but just really ways to analyze the order flow that you never thought possible. So you start adding that up, and the software, the training, the inner circle video series, the weekly group training, it's already $1,600, which already is, in my opinion, is a bargain. And as a bonus, right, I'm even going to give you access to my Orderflows playbook, which is a little course I did. It's one of my favorite courses on sort of advanced order flow, right? And I even give you 10 setups that you can go look for in the order flow. Are you going to get this access to this for free today as well? And normally I sell this for everything together. It's almost $2,000, right? That's not even including the weekly live group training, because you only get access to the weekly group training if you join with the software. Okay, now to get started, what you have to do is you have to go to orderflows.com/oft3.html. So other people are saying, like Sheila says, right, Mike, your order flow software is remarkably helpful because I can clearly see now what's really happening in the market. Like, for example, who's in control of the market on very specific times, and who's getting weaker as well. Because at the end of the day, that's what you want to do, right? You want to understand who's in charge of the market. Okay, you want to understand, are traders getting stronger or weaker? You want to understand really, basically, the market. Okay, other people, Ziad, I really want to trade properly and understand what's happening in the markets. Or order flow is the path forward. Mike's experience and explanation, it clicks, right? So, to get started, go to orderflows.com/oft3.html. So again, it's up to you to make it happen. I can't twist your arm and say, oh, you got to buy my software. I want you to become a better trader. You got to do it this way. No, you got to make that decision. You got to make that leap. And again, it's just a one-time payment of $749. So you're going to get all that stuff, right? You're going to get the software. You're going to get the order flow trading course. You're going to get the order flow playbook. You can get the Orderflow Inner Circle video series, and you can get access to join the live group training sessions that meets Tuesday nights. There's no monthly payments. It's not something I'm going to charge you $749 a month for or anything like that. It's just a one-time payment. So it's not these things you got to go, oh, I can't cancel those payments anymore. It's like, I've bought these things sometimes. It's like you sign up and you try to cancel it. You can't cancel it. You got to cancel your credit card. Somehow they still bill you on the credit card that even though you canceled it. No, it's none of that games and anything. It's just no monthly pay. You will have to pay for data fees, of course. There's no way around that. You need real-time data quote, and NinjaTrader fees, if you're using a paid version of NinjaTrader. And if you get a paid version of NinjaTrader, then your commissions will be lower. Okay. So what you got to do is go to orderflows.com/oft3.html. This is what the page looks like. You just scroll down, or you can click on that green button there. It says Get Instant Access to Orderflows Trader. It takes you down to the bottom of the page. Now on this page, you see there's a lot of videos you could watch, charts you could take a look at so you understand exactly what you're getting. And you can see it's a one-time payment, $749. You get lifetime access to Orderflows Trader. And what that means is, when we do an upgrade, you're going to get access to the upgrade for free, right? I'm not going to charge you because we do an upgrade. No, you're going to get access for free. I still got users that bought the software in 2015 that are still using it, all right? So I know it's good. I know it's stable. And you also get access to the Orderflow trading course. You get access to the Orderflow Inner Circle video series. And you get access to our weekly live group trainings. And I said also, as a bonus, you're going to get access to the Orderflow playbook. Okay? Because it's not on here because it's a special deal that you're going to get access to. So it's going to save you an extra $300. And once you click on that button, right, the Buy Now button, click here to Buy Now. It takes you to PayPal. PayPal processes it. I don't get your credit card information. I don't want your credit card information. I got other things to deal with. But anybody that's ever bought anything online understands what PayPal is. You don't even need a PayPal account. You could check out as a guest and just enter your credit card details. So, like I told you at the beginning, if you want a copy of my book, Trading Order Flows, go to this page. www.orderflows.com/book.html. It's going to take you here. You have to enter your name, first name, last name, and email, and click submit. Okay, then you're going to be put on a list. I will be sending you emails from time to time. And then after you hit submit, you're going to be taken to a page that will take you to the download of the ebook. You can just save it to your computer, save it to your phone, print it out, do whatever you want with it, right? But it's a good book. It took me quite a while to write it, and honestly, I had to wait for at least a year before I could start writing it. Because when I left J.P. Morgan, they're like, "Oh, you can't do anything for a year, etc." I'm like, oh, "Come on." I didn't want to start writing this book then, and they'll come back, "Well, that's J.P. Morgan's property." Well, screw you guys. But anyway, go to www.orderflows.com/book.html. So to get started, go to orderflows.com/oft3.html to get the software and all the extra bonuses. And again, thank you for taking the time out today and coming to this presentation. There was one question, one or two questions. Let me just take a look here real quick. How long will it will take a student to learn to be profitable? Well, it really depends on the student, because I don't know how much time you can commit to looking at the markets or trading. Some people got full-time jobs. Some people will have all day long to spend doing it. It really depends on the person, but you don't need 10,000 hours of screen time, in my opinion. Honestly, these firms, these trading firms, if you're not profitable quickly, you're not going to have a job very long. So I think most traders, if you're going to be successful, kind of know it early on. Rather than, I see people say, "I've been trading, Mike, for 10 years and I haven't been profitable. Can you help me?" Well, yeah, I probably could, but you probably have some bad habits you gotta lose. So it really depends on the person, There's no one right answer. I wish I could say, yeah, everybody would be profitable. Well, not everybody is cut out for trading, in all honesty. Some people, like myself, I can't be a doctor or a nurse, because cutting people open is not for me, and for some people, putting on a trade and risking just a few $100s, they can't handle it. So everyone has their own makeup, and it really just depends on the individual. But if you're dedicated and you really want to make it happen, it can happen pretty quick. I don't want to say a week, 2 weeks. I'd say give it at least 30 days to 90 days to see if trading is really for you, specifically if trading with order flow is for you. Because it's not something that, trading with order flow, you got to be in front of the screen. It's not something that you can look at where the order flow is trading after the day is over and put your trades in like that, like a swing trader. No, order flow is for day traders, right? People that are in and out during the trading day. So again, thanks everybody. Let me see. Thanks for taking the time out today, and that's all. So any questions, my email is mike@orderflows.com. It may take me a day or two to get back to your email, because I do get 500, 600, 700 emails a day. And again, thanks for taking the time out today. And again, to get started, go to orderflows.com/oft3.html. So have a great day, everybody. Bye-bye.